You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com, and co-hosts Alex the Viceroy Jacobson from Options Express, Uncle Mike Tusaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com. The Option Block is brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, everybody. Welcome back to the Option Block, everyone's favorite bi-weekly source for all things options related. My name is Mark Longo from theoptionsinsider.com, as well as from a little thing around here we like to call Ye Old Options Insider Radio Network. Getting old now, actually, 8 years plus. A little long in the tooth, but we still love it. 13 programs on the network, including well over 400 archived hours of this here Option Block program. Where can you find all of that archived podcast goodness? Well, of course, the mothership, the flagship, theoptionsinsider.com, as well as, of course, all of the various big podcast stores out there, iTunes, Stitcher, Aha Mobile, TuneIn, all of the other ones. And, of course, if all that's too much for you, just go grab our mobile app, available for iOS, Android, and, of course, the burgeoning Fire OS. And you, too, can join the party, build your own playlists, subscribe, download, whatever you want to do, and, of course, send us some great questions while you're listening. We love to hear from you guys. And joining me on the old program today, starting off with the man beaming in from that tropical enclave known as St. Charles, Illinois. You know him, you love him, as Uncle Mike Tusaw from RCM Wealth Advisors. Uncle Mike, welcome back to the program.
Always happy to be here from the tropics.
What's it, 90 degrees out there today?
No, we asked to keep it in the mid-80s.
It's good you have such control over the weather out there in St. Charles.
We have a strong government here.
Yes, well said. All right, and also joining us from that tropical mecca known as Options Express, the Viceroy himself, Mr. Alex Jacobson from Options Express by Charles Schwab. Mr. Viceroy, welcome back to the program, sir.
Hey, Mark, good to be here today. Not a lot going on in the averages, but a lot going on in the underpinnings of the market. Oil up over $2 today. Interesting moves in some of the commodity markets.
Yeah, we'll get to that. Some interesting paper in oil-related options as well. We'll get to that in a little bit. But first, let me introduce our final cohort here on the old Option Block program. You know him, you might love him, you might loathe him as the greasy meatball himself, Mr. Mark Sebastian from OptionPit.com. Mr. Sebastian, welcome back to the program, and well done, sir, on your most recent interviews hitting the old network.
Well, thank you very much. I had a lot of fun in Carlsbad doing interviewing and stuff. I like listening to other people talk almost as much as I like the sound of my own voice.
That's saying quite a bit, sir.
It is.
You actually did a good job, fostering questions, getting people to talk a bit. I know it's not an easy thing to do. I should know.
I think people know that I'm, one, a trader, that two, I understand what I'm talking about, and two, I'm not out to get people or to make headlines. I'm out to actually find stuff that is helpful to people. And so it makes them much more comfortable talking to a guy like me than, some reporter for, Dow Jones or something like that, or AP or whoever.
All those gotcha guys out there.
Well, the New York. Remember that New York Times hatchet job from last year?
Yes, that still resonates.
People burning from that one.
Oh yes, that still resonates. I still hear about it every now and then.
I mean, that was a hatchet job.
Yeah, one of my cohorts on the network was featured very prominently in that article, and as a result, I had to no longer have him on one of my programs. So I know it very well. That episode or that article, I should say. All right, with the team assembled, we're going to dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. If you haven't figured it out by now, you're a bit slow on the uptake, but it's all right. We still like you. This is indeed the portion of the program where we break down what was moving, what was going crazy, what was catching our eye out there in the old street. And as Alex alluded to there at the top of the show, overtly, from a quick glance, not a heck of a lot cooking on the old street, but there was some stuff lurking underneath the surface there. Most of the major indices off barely, fractionally on the day. It's not even really worth mentioning, just fractions of percentage points. The VIX cash rallying a wee bit today as well, up about 1/3 of a point, hovering right around 15 3/4 or so right now. So we'll start off there. Mr. Alex, you said there were a few things that caught your eye lurking beneath the surface of the market, so perhaps we'll start there. What were some of those items that really drew your attention today?
Well, Options Express occupies 2 floors here over at 311, and I was down on 10 today. I'm on 11. I was with the futures desk, Mike Zaremski and his crew, and we were talking about what customers were doing and what's kind of still lighting up the tape. And he was mentioning there's still a lot of bullishness in oil. And given what's going on in the markets today, the equity markets themselves were very quiet. I know I said this a couple of shows back, but today's a day when you like having a futures business because big moves in oil today, big moves in rates with 10-year back over 2%. So clearly a day where there was a lot of stuff going on in futures markets. And in fact, one thing Mike shared, which not sure if I can share, but I will anyway. And that's the fact we're still setting record volumes in our futures business. As terrific as last year was, we're still way up from last year. And actually, the conventional option business, the securities option business, has actually been a little softer this year over last year. So a lot of folks pilot into futures, and I'll talk more about it. I'm going to talk mobile in the Xpress Block today, but if you haven't looked at futures options and you are an options trader and you're looking at getting exposure to rates or energy or the euro, stuff you should look at is futures options.
Speaking of futures options and crude, I was looking over some interesting stats and some articles going into the show today, and our friends over there at FT profiling some interesting trades going up this week, or actually yesterday, and some other days, some other recent sessions, I should say, here in WTI. Uncle Mike, you remember a few years back, we profiled all those crazy people flocking into the 200 strike calls across the board in a variety of oil-related products a couple of years ago for that big Saudi day of rage. Not quite as crazy these days, but people are starting to flock into the par calls, the 100 level calls, particularly a little bit farther down the road, talking in particular the DEES 2018 WTI calls. Their open interest has pretty much tripled since the start of the month there. At the time when they profiled it here at FT, they said the open interest was on the equivalent of about 2.7 million barrels. That's in spite of the fact that most of the most optimistic projections show oil maybe at around 75, looking at the futures by the end of 2018. Still not the most expensive flyer. When they profiled some of these trades going up, they were going up for about, I think it was $2.36 for the call. So not the most expensive flyer we've ever seen out here, but still fairly aggressive, perhaps showing that crude is going to rebound. And again, you got about 3 years on these things, so it's a much longer term play. I think a lot of people would if you had to take which side of that to be on in the next 3 years, I think over 100 would have a lot of attraction. Speaking of commodities, I know in addition to your blasting out a downside out there in XLE, Uncle Mike, I know you've been looking at the crude land. So first off, what's your take on all these people flocking into the par calls in WTI, and then what else caught your eye in today's activity?
Well, I think that just like what you said, it's different from the day of rage calls of the 200 level that we had a few years back, in that you have 3 years, and crude going up over the 100 mark in 3 years, it's not out of the question by any means. I think that the fact that just within the last couple of years, it was around the 100 mark pretty regularly. I think that the fact that it could go back to the 100 mark over the course of the next 3 years, it's not necessarily the craziest trade ever done. With that being said, just a couple of other things that caught my eye, with the exception of the 35 puts that I keep selling on XLE all the time. I can't
hitting
get
those
enough
bids,
of selling
baby.
those penny puts.
Hitting those bids.
Yeah, you can't get enough of it. But yeah, just like to go along with what Alex said, we have I'm looking at TLT down 1.5%. In looking at just a lot of the stocks on the day, there really wasn't a lot going on. One thing that I did find interesting isn't so much today, but yesterday, you'll notice that a lot of, even with the downturn in the market that we had yesterday, you'll notice that a lot of oil stocks really didn't get hit too hard. So in looking at that, I think that it's just more food for thought, that if you're looking to perhaps get into the oil stocks, I don't think there's going to be too many more opportunities, and I'd suggest getting in pretty soon if that's something with which you have even the least bit of interest.
Thank you for that, sir. And Mr. Sebastian, what was top of mind for you guys over there in the pit chat today? Was it crude? Maybe some of your mentees diving into these par calls, or what else was catching your eye out there in pit land today?
In terms of crude, I just think it looks like a huge fade. I'd be short. I think that, it got like a nice little bounce off this Yemeni. I don't know, Yemeni.
Yeah, Yemeni
issue. Yemeni, whatever issue. And it's probably a fade. I was also paying attention to the fact that, here we are, the last 3 days, the market sold off 50 points. And, and at the basically not the lows of the day, but certainly lows of the afternoon, the VIX futures are down. VIX is barely moving. I don't see this turning into some sort of extended sell-off. And then we've got Janet Yellen talking tomorrow. And I was telling people, and I was so proud of this joke. I said, she's going to be so dovish, she should be a 1/4 moisturizing cream. And that went past many people in the financial world. I was a little surprised.
And went over their heads, and they're not really up on their female moisturizing brands?
No, my wife got it. She thought it was hilarious.
I think you're talking to the wrong audience there, sir.
I am.
Clearly, your knowledge of female moisturizing products is far above and beyond.
To be fair, a man can use Dove. All right, just because it makes your hands feel soft and moist doesn't mean it's for girls. Just saying.
So you say, sir. I think you've championed that before. I think you've championed a lot of mostly female-oriented products for your own use, and that's your own prerogative, sir. We welcome all different types and flavors here on the old network. But before we move on to some other interesting stuff, we're going to get to the odd block in a second. But speaking of that, there's been a lot of talk these days, looking at some unusual activity. People always like to see what Buffett is up to next, and it seems like the folks piling into Kraft were perhaps the correct ones here. We've talked about some of this on the past on the Options Insider and all the different unusual activity that we profile, and also a lot of people have been writing about it lately, Bloomberg and others, in particular the big block of a 10,000 lot of the Kraft calls. They were betting, I don't have the exact, 67.5 strike. We're going up by June, so we're looking at the June 67.5 calls getting picked up 10,000 times, looking for roughly at the time about 8.5% jump out there in Kraft, and it seems like those people out there loading up on those options are at least doing all right out there today. Of course, Kraft up about 1.5% today to 84.39, and it has been a bit of an upward story there of late. We'll see if those continue to pay off. But again, the story of Buffett piling into Kraft seems to have really, or perhaps just the rumor of it has caused a lot of people to really take another look at this. I know we had this same related story a few years back with the Heinz ketchup deal, and there was someone doing much smaller size back then. I believe it was only a few hundred contracts that they picked up, but there were some very well-timed call acquisitions ahead of that deal as well. So we'll see if they investigate these calls here, but the 10,000 lot being the most noteworthy of all, but of course a lot of smaller paper having gone up ahead. So this kind of goes to show that the Buffett whale is front run by a lot of little smaller fish going into a lot of these deals. And speaking of unusual activity, I think it's about that time. So without further ado, let's dive right on into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, if all that Buffett unusual activity love wasn't enough for you, we got some more unusual activity coming your way right here in the Odd Block. That's what we do here. That's what this portion of the show is all about. Going to kick things off with, I know, my own personal favorite name I watch very closely every day. This is, of course, EOG Resources Inc., ticker symbol appropriately EOG, closing today right around 91.36 or so, up about $1.40 on the day, so not a bad day here for good old EOG. This is a name that does about 14,000 contracts and change. In particular, what caught our eye out here in good old EOG was a trade going up in the April expiration cycle. In particular, talking a lot about par calls today, or keeping that trend alive here with the April par calls, the 100 strike calls, for those of you who aren't familiar with that old school vernacular. Going up, paper buying when we profiled them this morning, just to here under 6,000, a little bit over 6,000 going up total on the day. Again, paper buy-in for 22 cents. A total of nearly 19,000 are open on this strike, and if you look at the expiration chain here, listeners, you'll see that's pretty much the only strike of any relevance till you get a little bit farther down. There's not much else open around it. So a lot of open interest on this par strike, and perhaps looks like someone taking some of that off today. All this paper went up pretty much in one block. If this is someone coming back to buy back some shorts, it's kind of interesting. He does obviously have some time to go on this trade, but clearly if he is short, perhaps he's happy with his quarter or so and willing to take the rest off. We've talked many times on this program and others on the network about how these out-of-the-money options tend to decay a little bit differently than you expect with the at-the-money stuff. And so perhaps our friend here just saying, I'm not gonna spend the rest of the time trying to get 22 cents. I'm just going to take some of that off. If that's the case, then he's going to be coming back for the rest of these sometime soon. So pay attention to that. Mr. Rock Lobster, let's start here in EOG. What's your take? Think this is our friend here, perhaps buying back some of these shorts, or you think he's piling in for some more here?
Did you just call me a rock lobster?
Did I do that? I am sorry. I meant the... How
freaking dare you?
It's quite the compliment.
Look like I have one
quite
eye
the compliment to
and
you, sir.
A 6'3" lumbering giant.
Okay, greasy meatball, far more appropriate nickname.
Thank you. Let's get our story straight. I'm the short Italian. He's the one-eyed monster.
Go forth, sir, and prosper.
Yeah. I mean, it looks like. Interestingly, there's a volume on February 24th of about 6,000 calls that went up around somewhere between 80 cents and $1. I'm guessing that this is that guy closing. So yeah, I mean, looks like the guy made 50 to 70 cents and said, I'm happy with where I'm at, and I'm gonna, especially with the stock up nicely today. He was, figured, maybe the stock's gonna make a run. I want the delta. Maybe that's kind of what he was thinking.
Indeed, sir.
Yeah.
Indeed, and sorry for that compliment, calling you.
No, it's
you
fine,
Andrew.
Uncle Mark.
There we go. I like it. All right, here we go. Moving on to our next name. This one just lighting it up today. This is the name we talked about quite a few times on the show in the past. This is the iShares MSCI Emerging Markets ETF, aka EEM, popularly known as EAM, closing today $39.35, off about 40 cents or so. So it wasn't the underlying move that really drove it yet. This is a name that does about 250,000 contracts a day, doing well over that, about 440,000 today. So it was just lighting it up with paper out here in good old EAM. And you could pretty much pick a month, pick a strike, and there was something going up out here. We just chose one of them, but there were, in particular in April, but there was a lot. I mean, all that paper, listeners, obviously there was quite a bit going on. But what caught our eye first out here this morning, what we highlighted on the website, was a bit of a downside put spread, a pretty sizable one at that. It was the April 34-36 put spread going up, when we profiled it, 41,000 times. Yes, listeners, 82,000 of those contracts we just talked about came in this one trade, which is why you might see why we focused on this one. Again, going up for a nickel, went up in two giant, as we might say, enormous blocks. Both of them stuck and or marked as spread, I should say. And it sounds like this guy just pretty much, he had this put spread on, and he's just, he's not a fan of it anymore, wants to just take it off for a nickel. Perhaps not too concerned about what's cooking here in EAM. Again, these are pretty far out of the money puts at this point, at least by that April timeframe. These 36 puts at about 8 cents, and the 34 is at about 3 cents. So you can take the whole thing off for about a nickel. Our friend here probably deciding, what the hell, let's just get rid of this thing and move on to perhaps something else. A lot of other said big trades going up even here in April. We see 22,000, looks like, of the 839.37 half put spread perhaps going up, 13,000 of the 840 calls, 8,500 of the 841s. That's just in April, listeners. It was a lot of paper going up across the board here. So, Mr. Sebastian, what's your take here on this downside put spread, as well as any other paper that might have caught your eye? There was quite a bit of it out here in good old EAM today.
Yeah, we've seen this. We saw a lot of these puts trade back in February, and then we saw more in March. My guess is that this was a guy that sold puts, was trying to strategically sell put spreads, kind of closing because he didn't want to take. He didn't want to put turn a winner into a loser, which is always the smart way to trade, folks. So my guess is he had this thing on. He either put it on kind of in the lows of March before the Yellen period, or in kind of early February when things were looking ugly as well. But that's my guess on when that went down. So my guess is this is a close and the guy made money.
It's going to offer a nickel, probably a good guess to hazard, sir. We got one more in store for you, listeners. It's all April, all the time today, and this next one going up here in the good old Market Vectors Semiconductor ETF, aka SMH, closing today $53.67, down about 40 cents, or nearly about 0.75 of a percentage point on the old day today. This is a name that does about 11,000 contracts a day, doing nearly 26,000 today. So just a ton of paper again out here in SMH. And like I said, once again, all that love, all that activity pretty much concentrated in the April expiration cycle. In particular, what caught our eye was another pretty sizable put block, this time going up on the April doubles, the April 55 puts. When we profiled them first on the site this morning, it was 4,709 of them going up in one block on the Philly. Looks like paper selling on those. As the day has progressed, probably about double that, nearly 10,000 have gone up total on this strike now, at some other prices for the second blocks, obviously, on open interest of nearly 15,000 on this strike. So it looks like perhaps we have a friend here who's getting the heck out of some puts on this strike. Again, things selling off. It's been a bit of a downswing of late here. Out here, if you look at the chart, listeners, you'll see pretty aggressive down move here in good old SMH of late. So it could be perhaps our friend taking his opportunity to get the heck out and take some of these puts, take his money and run. If that is indeed the case, he's got a few thousand more to go here. A lot open on this strike. Mr. Non-Lobster, a.k.a. Mr. Greasy Meatball, what's your take here? Take us home on our friends getting out of some puts here in SMH.
Yeah, we've highlighted these put sales on multiple occasions, and they had when you sell puts, typically it makes sense to close them. He would have behooved himself to close these Monday, but would have saved himself a little bit. But to be fair, I think he's still in some decent shape against these because of the simple time decay. So, it is what it is. Should have closed on Monday. This is why when your trade is up nicely, have a plan, close it, and get out and move on.
Well said, sir. And speaking of moving on, it's what we have to do now. It's time for us to move right on into the Xpress Block.
The Xpress Block, brought to you by Options Express by Charles Schwab. Options Express by Charles Schwab lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources. Options Express by Charles Schwab is the online broker for all traders. Best of all, Options Express by Charles Schwab lets you trade stocks, options, and futures all in a single account on powerful yet easy-use trading platforms, including mobile devices. Visit optionsexpress.com for your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome to the Xpress Block. As the name implies, this is the portion of the program where the Viceroy takes the reins and I take a bit of a rest. Mr. Viceroy, we go in many different areas, explore many different avenues of OX over there during this segment, sometimes platform, sometimes trading desk, and some of the inquiries the clients are sending, and sometimes some of the interesting stuff that's catching your eye over there. It's pretty much a potpourri of all things OX during this segment. So, Mr. Viceroy, what caught your eye? What are you bringing to the attention of our listeners today?
So in the potpourri of tools, one of the tools talk about occasionally on the show is the OX mobile platform. And every time I talk about it and talk about the growth of mobile and the adoption of mobile, I get emails that listeners will say, well, tell me more about it. So today we're going to focus on OX mobile. And when we talk about mobile, we're talking about things you can do on a smartphone, things you can do on a tablet, things you can do on a pad. And I want to showcase some of the things that you can do, because a lot of people associate mobile with having reduced functionality, and that's simply not the case. So on the OX mobile platform, you can trade the all-in-one trade ticket, which is 4 legs. You can manage positions and orders. Real-time quotes on the OX platform, on the OX mobile platform. Obviously, if you're a customer with an established account, real-time quotes. Full options and futures chains. And I know that's a question I get a lot is, well, can I see an entire chain on mobile? Can I see the entire listing of futures expirations? Yep. If you establish a watch list, I have a watch list with about 40 names in it that transfers over to my mobile device. And if you haven't, as you hear, we have visitors in the office today, very young, very cute visitors. But you can transfer your watch list. You can manage your watch list. And the mobile platform gets real-time news. So, if you're a trader and you somehow think, you're out in your car and you hear the business news and you say, God, I got to rush home to make a trade, or I got to rush to the office to get to my desktop, realize on a mobile platform, you can do just about everything you can do on a laptop or a desktop. If you're an OX customer, download the mobile platform. If you're an Idea Hub user and you want to trade iron condors on the mobile platform, you want to trade iron butterflies, you want to trade broken wing butterflies, you've got the all-in-one trade ticket there. So take some time and get acquainted with the Options Express mobile platform.
Well said, sir. A lot of people, I think, like you mentioned, still have that antiquated misperception of mobile kind of being less robust. You can't really do it. It's really only good for checking quotes and maybe hitting some quick, order entries. But you guys and a lot of brokers out there have really invested a lot in the mobile functionality. They certainly see the writing on the wall. They know that lion's share of the clientele. If they're not there already, they're moving that way in the next few years. And so you can't get away with the old bare bones mobile app. And, you guys and others have done a good job of adding a lot of things like you mentioned, charting tools and others. So you can really have a fairly fully functional experience on the mobile app. I play around with it all the time, and I'm always amazed what you guys get away with using on that mobile application. So if you haven't checked it out, listeners, and you are an OX customer, of course, surf on over there to your app store of choice, the same place you find our mobile app, and then download the Options Express app as well and play around with it. And then if you have questions or comments or things you'd like to see in the app, right into the show, let us know. We'd love to hear from you. Speaking of hearing from you guys, it's that time of the week. It's Thursday. That means it's time for you guys to take over the show, for the inmates to run the asylum, because it's time for the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, listeners, you guys know what time it is. It is indeed that time of the week, time for the mail block, time for you guys to take over the program. No shortage of ways for you guys to make your comments and questions known to us here on the old program, including, of course, surfing on over to the website and leaving a comment on a show note, or perhaps using the website feedback form there. It'll all get routed to us appropriately, or, of course, via email, questions@theoptionsinsider.com. Just be sure to put question for the option block somewhere in there so we know where to route your question. And, of course, via social media, twitter.com/options, facebook.com/theoptionsinsider, and, of course, the old stocktwits.com, /optionsinsider, I believe it is out there. So we're all over there. If there's a platform you're using and we're not on it, let us know. We'll consider going on it. But it seems like Twitter is definitely where a lot of the action is these days for a lot of our listeners, and Facebook to a lesser degree, and of course email and the website form. All right, let's kick things off. We always joke here on the program that we get some epic screeds from our listeners. This is certainly one of them. Perhaps not as long as some of the other epic ones we've seen, but still pretty impressive. We love what you guys really take it to heart, so we'll attempt to do our level-headed best here for you. This one comes from Jack1390. He writes, I appreciate your input on the following issue. I know that I am not alone in dealing with these questions. I continue to be confused on which weekly strike to choose when trading for a 1 or 2 day hold. I realize if the issue does not move in my desired direction by Tuesday afternoon, I risk theta decay and it increases rapidly as the week progresses towards expiry. My thoughts in trading weeklies is to trade the at the money or the most liquid strike, I'm going to insert some words here to fill it out for him here, on Monday and Tuesday, and then trade 1 strike in the money on Wednesday and Thursday, and 2 strikes in the money on Friday. I have read many articles recommending to trade deep in the money options, he writes here in parentheses, plus or minus about a 90 delta or so, for a close to 1-to-1 effect moving with the underlying, but the deep in the money, as he points out here, correctly, are often quite illiquid and expensive. He goes on to write, my model generates about a 75% plus success rate in choosing issues that move according to my projections, and I choose to use weekly options to trade a small universe, he puts in parentheses, Apple, Amazon, Google, and Netflix, but I am still struggling to definitively choose the right quote option. My model is predicated on an immediate move, and if it doesn't transpire in a bar or two, I tighten my stop or exit. If I am looking to trade, I am looking to trade naked or use strips and straps in order to implement my model's signals. Thank you in advance. This is actually Joseph here. Interesting question here, Joseph. And so you clearly have done your homework. First off, congrats on your model being 75% accurate. That's pretty impressive. If that's the case, then you're already ahead of 90% of the game out there. So well done on whatever you've done to configure that model to such a high degree of accuracy. But this is actually an interesting topic, one that we've received a lot of inquiries on lately on this program and others. A lot of people turning to options for more of the intraday and, in your case, very short duration type moves. It's clearly well suited to the weeklies. That's kind of what they were designed for. But you're encountering one of the issues with the weeklies. I'm assuming from the way you describe it, you're looking at long premium because you're looking at mitigating decay. If you were looking at the other way around in terms of maximizing decay, I don't think this would be as much of an issue for you. So clearly you're probably looking at long premium type trades. You're looking to capture directional movement in the underlying, typically a long premium weekly trade. And now you're discovering the problem. These things decay to high heaven, and they decay fairly quickly. I actually like the approach that you're taking here of taking the at the money strike early in the week when they're listed, the at the money essentially, because it's still early, still have a little bit of time on that, and the decay isn't really kicking in yet. I mean, it's starting to kick in, but not as aggressively as it does later in the week, and then adjusting that accordingly as the week progresses. Of course, listeners, if you're not familiar with how these work, of course, the farther you get on the deep in the money portion of the options chain, the more intrinsic value, the less extrinsic value you have. Therefore, you're not suffering as much from the time decay problem that he's worried about with weeklies. So that actually is a good solution to take for using the weeklies. And then, of course, the other side of that, of course, as he points out, is these are expensive, they're somewhat illiquid, and they're a little bit wider, so you have to pay a little bit with a bid-ask spread. You can try middling these, but market makers aren't that inclined to step up and really fill you in the middle on these things because it's essentially almost like trading stock at that point. So you're not going to get these deep, particularly if you're going really deep in the money options, much better than a few cents around where the stock is trading. So if you're expecting to middle a 20 or 30 cent wide market and get some sort of fantastic fill, it's not going to happen. It's going to be closer to where the underlying is trading. So just be cognizant of that. But I think you're on the right path. I kind of like what you're doing here. I think you mentioned naked. You mentioned you would be willing to use strips. I would probably lean towards that way if you want to try to make some of that decay effect work for you, is go slightly in the money, couple strikes in the money, like you're saying, but then offset that with a nice out of the money call right or whatever option you're trading, put spreads or call spreads. And then you have that decay working for you, more so on the out of the money option, less so on the in the money option, because as we said, there isn't as much, time value there to really decay. And that might be one way you can make these little moves survive, because that's what we're looking to do here. You're looking to survive until your move can kick in. And something like that, where you can write that spread, particularly if your model is as accurate as you say, you can predict 75% of where these things are moving, then you should be comfortable setting up spreads to do that. I wouldn't go crazy. I wouldn't go into ratios. I wouldn't go 1/2, 1/3, because then you have naked, short legs, and you're talking some excessive risk. You'll do better with the decay, of course, but those extreme movements you might encounter in the 25% when you're wrong could wipe you out. But a nice in the money call, slightly in the money. I think 90 is even a lot, maybe 75 delta. Save yourself some money there, and then go the other way around and flip on the other side of the fence with some nice out of the money, maybe in the 25 to 30 delta range. And then you have a decent spread as long as you set it up properly, and you could actually get a little bit of move and also have some of that decay actually work for you, as opposed to fighting against you the whole time, which is the epic battle whenever you're trading weeklies. Uncle Mike, you trade a lot of near-term stuff here. What do you have to say for our friend who has this remarkable model and is looking to take advantage of it using weekly options?
75% success rate, I think, is phenomenal. In looking at this, Joseph, I think that I think you're on the right track as well. For what you're trying to do, I would tend to lean more towards the deep in the money options as opposed to the spreads. I like what Mark had said on that, but with the names that you're using, Apple, Amazon, Google, Netflix, I think that there's going to be at some point a move that goes beyond what you're looking for in a good way. So in other words, let's say that you're always buying calls on Amazon. Now, I know you're probably doing calls and puts on all of these, but let's say that you're always buying calls on Amazon. If all of a sudden, while you're in this call and you get some type of news announcement or just something happens, you'll be able to take advantage of that to benefit your model. So I like the idea of going deep in the money, and what Mark pointed out as well, the disadvantage of going with the deep in the money options is the fact that your bid-ask spread isn't going to be quite as friendly. I think that given the choice between the two of them, I would probably tend to lean more towards buying a deep in the money option because of the fact that you're trading high flyers. And if the high flyer takes off, then you can benefit from it while you're actually in it. If you're doing a spread, you're probably going, let's say you were normally going to have 90 deltas on the trade. Well, you could either buy a 90 delta call option, or you could buy 2 45 delta call spreads, let's say, and have the same effect. Well, it's good if you're getting the movement that you're trying to get, because normally you want to get a $2 movement in Amazon, let's say. I don't know what your model dictates, but let's say that's what you're looking for. If you're in the long call option, you're going to be able to benefit greater from that type of movement. So, I mean, I'm with Mark in that my hat's off to you for a 75+% success rate. Just the only thing that I would say is in the 25% with which you're unsuccessful, make sure that the 25% doesn't wipe out the 75%.
Now, I like what you're saying. The reason I really went with the spreads is because he was, clearly being demonstrably impacted by those spreads, on those deep in the money options. And, the deeper you go, the worse it's going to get. So I thought if you add the out of the money leg, they're more liquid. You have a much better chance of getting a better fill on those. And then at least you get a halfway decent spread you're legging into, as opposed to just getting crushed on the in the money. And then on those times when it doesn't really move in his favor, he still gets that decay. The spread can still widen out. Whereas, the deep in the money, then you just need that movement, and if you don't get that, then you got nothing, So there's no right way to skin this cat.
What Mark's saying,
there's no right way to skin this cat. I'm sure Alex will have a completely different suggestion too, and we're really confused here. But yeah, that's what's nice about options. You literally have options. You have many different ways to do it. Mr. Viceroy, where do you fall on this raging, seething debate?
So the 4 names, Apple, Amazon, Google, Netflix, you probably couldn't pick 4 names that are more subject to massive implied vol spikes in the weeklies. January 27th, Apple, the front weekly was, a 90 vol. The regular expiration was a 48 vol. So first thing I would do is I would have a great tool that shows me the implied vol of the weeklies, and realize that implied vol on the Thursday or Friday of expiration week is simply wrong. Short-dated stuff, the Greeks don't work well. Having said that, I'd look at the front weekly and I would look at the second weekly. And if I've got a good success rate, everybody wants a good success rate. Kudos on a 75% success rate. But to Uncle Mike's point, what's the other 25%? Premium sellers, 90% success rate, 10%, unsuccess rate. Of that 10%, 2% is a death rate. So I'd want to know about the other 25%. Rule of thumb, I'd buy 1 strike in the money. I would, in most instances, buy the second week. And I would, once I get the execution, have a tight stop on it. So I want all the great benefit, all the great gamma of the weeklies, but I want to moderate it a little bit. So I'm going to go to that second week, and I would stay out of all 4 of those during earnings week or news week, because that's when those front weeklies are going to be 90 or 100 vol. Your model forecasts a $4 move. You get a $4 move, and your option doesn't do anything because the vol goes from 90 to 50, and then you're cursing out the option community and all the market makers. So more importantly than anything, I'd look at the implied vol of the front couple weeks, and that would help me make my decision. I'd probably go to the second week and 1 strike in.
There you go. I was right there. What is it, Jason? We got 3 different, Joseph, excuse me, 3 different suggestions for you. You can go the straight up deep in the money, like Uncle Mike suggested, more the vertical approach like I suggested, or Alex taking you all the way down the rabbit hole with using the strips and trading a little bit of those little short-term, near-term time spreads that are so popular in the weeklies as well. Again, many ways to skin that cat. It really is kind of up to you which way you prefer. But it is an interesting question. I'm getting so many questions on the weeklies, it seems like, these days. I know we mentioned before a question here from Mark Brand, who writes in quite a bit. He's been writing in about Uncle Mike. I think you've infected him on the Apple weeklies because he's been writing in a lot about the Wheel of Fun. He's getting into a lot of wheels of fun out there in the Apple weeklies. He wrote in saying, collecting premium 52 times a year really adds up. So there you go. We have some other fans out there going the dark side route in the weeklies. But again, we talked about Wheels of Fun before here on the show. We have time. Let's see for where are we? One more here. This one comes from listener, goes by the handle NJ. He or she writes, what should I be using to value my index options properly, the cash index or the actual underlying future? Thank you for all of your insight. Well, I think we can answer this one fairly readily here on the program, NJ. If you listen to the show at all, you know we quote VIX Cash a lot, but we don't really talk about VIX Cash being as any sort of actual, underlying precursor for options pricing out there in VIX options. Whenever we talk VIX options, we always talk about the futures. Why? Because the options are actually priced off of where those futures are trading. The cash is a nice thing. We like to, it's a good thing to quote in abstract, and in abstract, it kind of gives you, and this applies for, most indices that have futures trading on them and options trading off of those futures, not just VIX. You can look at SPX and a bunch of other things out there that are, that have the similar structures. But essentially, the cash is a nice thing. It gives you the aggregate of where, all those issues within it should be trading, or in the case of VIX, where the model says, it should be trading. But then, of course, there's where the actual money is trading that product and over the time frame, and that's where the futures come in. So if you're looking at VIX options, you're not going to price it with the cash. In fact, that's still to this day, ironically, as popular as VIX has become, as many times we talked about it on this show, many times that we talked about on other shows like Volatility Views, and we say, no, don't use the VIX cash. Use the futures to price these things. We still get so many people writing in, and not you so much as people writing specifically about VIX, saying, why are these things so screwy? I can't make these models work. Why are these numbers not making sense? It's because they've all had the VIX cash just beaten to death to them over the years and quoted in so many outlets on a regular basis that they just assume that VIX cash is the number. That's where the actual heart of the index is transpiring, where the reality, like we said many times, is kind of more of just an abstract index, and you really have to look toward the futures for where these things are actually trading and where the options are then trading off of that. So go for the future, sir. Go forth to the future, Mr. NJ. That's what I have to say for you. Mr. Viceroy, Uncle Mike, anything to add here for our friend, Mr. NJ, who's a bit confused about index options?
Nope, you're spot on, Mark. Anytime you've got a robust futures market, price discovery comes out of the forward, comes out of the futures price. There are rare exceptions like oil, where you can't really do a cash and carry. But if you're trading SPX or NDX or the Russell or the Dow, the futures price is what's relevant. Cash price only becomes relevant at one point in time, and that's at settlement when everything converges.
I think one more thing to add on that too, especially with the VIX, is how if you're looking to trade a horizontal spread on the VIX or a calendar or a diagonal and something along those lines, just make sure that you understand the margin or maintenance requirements for that. I remember when the VIX options first came out, I think it was almost 10 years ago now. I remember there was a lot of confusion on that in terms of how that would work and why it would work. So if you are going to trade spreads in different months and expirations, just make sure you have a good understanding as to how the maintenance requirements work at your individual broker.
That's a good question. I think it was 2004 when they launched those options, was it not? I believe it's been over 10 years now, which is terrifying. But
that's what I was thinking too, right as I said it.
It is longer than predates Options Insider and many other seminal events in the old options business. Wow, that's crazy. Now you make me feel old, Uncle Mike. Before we can get the time to dwell on that, I think we'll keep on rolling right on into our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. This is indeed the portion of the program where we tell you what we're watching for the rest of this week, heading into ye old weekend. We mentioned at the top of the show there was a few interesting developments coming up. Not so much really anymore on the earnings front. There was GameStop after the bell. Maybe if Andrew was on, we'd profile that a little bit. I know he likes the gaming sector. And, of course, before the bell, we did have, this is not really Around the Block, but we did have, of course, that Options Express staple of good old Lulu, and they, of course, doing fairly well today, up about 5%. So the street liking what they saw from that maker of transparent women's yoga pants. They're never going to live that one down. And aside from the transparent pants, what else was catching your eye, and what else are you watching for the rest of this week into the old weekend? Uncle Mike, perhaps we'll start with you, sir.
I want to see if oil can get a little bit of a rally going from the uptick that it had today. I know a lot of it was based on news, but I guess that's one where the greasy meatball and I may be in disagreement. I think it might putter around for a little bit where it's at, which it has been, but I think we're closer to the bottom than we are to the top in oil. So I'm watching that. Watching bonds. We actually have had 2 down days in bonds, which has been a rarity over the course of the last couple of weeks. And then watching gold. We've been catching a little bit of momentum in gold. Want to see where that goes. And then I want to watch Miss Yellen speak. And that's what we're watching.
It's okay, Uncle Mike. It's just us here on the show. You can admit it. It was you piling into those par calls in WTI. You know it. You know it.
Well, I'm selling. I got all the puts that I sold in XLE at the 35 strike.
You got a leg into that risk averse. I like that actually. The 35 XLE par WTI DC 18. But I'm not sure when you're writing those. Maybe September on the XLE. So a little bit of a time spread there as well.
That's confidential.
Yes. Interesting spread you have working there, sir.
It's a time cross market strangle.
I like it. Well done. All right. Mr. Viceroy, take us home, sir. What are you watching for the rest of this week into the weekend?
I agree with Mike on crude. I think crude, I know there's a shooting war going on right now in Saudi Arabia, who is, I think, still the world's biggest producer, unless we're the biggest producer. But Saudi's in a shooting war, and there's no telling how this will play out. So, surprisingly enough, I would, in my personal account, buy those 2018 crudes. I'm a big bull on crude. Also looking at rates. I mean, Mike, I think I've converted Mike to a macroeconomist now because he's talking energy and rates, but I think our 10-year is pivotal in all this, and I think it's going lower. Market's in a trading range, and it's either got to break out to the upside or break down to the downside. It just keeps grinding, and we get these 300-point down days, and you turn on the radio and open up the newspaper, and everybody says it's the beginning of the end, and the next day you're up, and all these folks have been wrong so far. At some point, this market could correct. I think it's going to break out on the upside, but there's a shooting war going on. So keeping an eye on the news. The 10-year when we started the show was back over 2% yield. It's ticked down a bit now. As I've mentioned, it's 10 times the yield of the Bund. That can't go on. That can't exist. Or people will be buying the dollar and buying the 10-year like madmen. And the thing about oil, the thing about rates is, unlike the stock market, they tend to be kind of in macro trends. And this is something I learned the very hard way when I was initially a trader, and then when I called on hedge funds, and they had these big macro views. I remember calling on a hedge fund once that had this big view on the euro, and it was a ridiculous price. And within 3 or 4 months, they were right, and they had made billions of dollars. And I remember coming back off their desk, coming back to the ISE and saying, God, look at this trade. It makes no sense. I don't understand it. They're very smart people, and they were right. So keeping an eye on a couple macro metrics.
Well, you heard it here first, listeners. It was the Viceroy piling into those par calls in WTI. So keep an eye on those. Both Mike and the Viceroy liking that strike. Perhaps we're going to see, maybe we'll see that open interest quadruple before our next program. We'll see. Keeping an eye on that one. I like your spread there, Mike, the XLE puts versus the way upside WTI par calls. An interesting one, to say the least. Unfortunately, that's all the interesting stuff we have time for on today's program. But before we go, as always, let me check in with each of my cohorts here one last time. See what they have cooking that may interest you until the next time we can all gather here together around the old all-star panel table. And, of course, the greasy meatball, a.k.a. the non-rock lobster, had to hop off a little bit early. So he asked that I would send you folks over to the blog. Surf on over to optionpit.com/blog to see all of the goodness they're writing up there on a daily basis. Some of that stuff makes it over to the Options Insider Insiders. You can find it there as well. Then, of course, click back on over to the blog to read all the stuff they have going on over there. Maybe sign up for a webinar or two. I know they're going to be adding that store there pretty soon, too, so stay tuned for that. And in addition to that, Uncle Mike, what's cooking in the land of RCM Wealth Advisor / future / alternative / MISC that will interest our listening audience?
/IRAs. It is still IRA season, folks, and if you have not done your taxes, it's still not too late to make a contribution to your 2014 IRAs. If you have any questions on that, feel free to give me a call. Personally, I'll be more than happy to help with that. 312-212-3531, or send me an email at mtusa@rcmfs.com.
And Mr. Viceroy, take us home. What's coming down the pike in the land of Options Express education and live events?
So, live event this Saturday. Jimmy Rouzan and his crew will be live in Dallas, Texas, starting at 9 a.m. In the Dallas time zone. Jimmy does a 3/4 of a day program, showcases the tools. Former Group 1 market maker. He can answer just about any option question, and just a real interesting guy. Thursday, April 2nd, Nina's going to do the trading platform and the site tour, and then I'm going to skip into the next week, Tuesday, April 7th. Jim Wyckoff, who writes the well-known Wyckoff letter, will be doing his monthly futures outlook. Let me point out that even if you're not a futures trader, what the trends that are developing in the futures markets can mean to your stock portfolio, especially when you start thinking about things like the price of oil, the price of gold, the price of foodstuffs can be real critical. And again, even if you're not a futures trader, I consider coming in to listen to Jim. A new presenter, someone we started a couple months ago, and I'm just going to butcher this name, but Misko Tomzik, who's well known in the futures community, is going to do on Wednesday, April 8th. Misko is going to do the strengthening dollar and its impact on commodity prices. Again, I listened to his first couple that he did here at OX. Real interesting, really insightful. All the events are free. The live event is free. All the webinars are free. Come to optionsexpress.com and click on the free education tab. You don't need to have an account to attend an education event. Obviously, after you do, you're going to want to rush to open an account. But everything's free and available on the site.
Thank you for that, Mr. Viceroy. Surf on over to optionsexpress.com. And on behalf of the Viceroy and Uncle Mike and the Rock Lobster / Greasy Meatball, he'll love that, and indeed myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show and for sending in such great and indeed epic questions. Keep them coming. I love to see how you guys are really thinking about this stuff because it's fascinating to see. And we'll see you guys next time right here on the Option Block.
The Option Block was brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.